Welcome. In this video, will ZBCN coin continue to fall? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. The structural formations we observe on the chart often help us understand the potential future direction of the price, and especially rising trend lines can act as reliable support zones in technical analysis. The current upward trend structure clearly shows that the price is advancing by consistently forming higher lows and higher highs over time. This indicates that the buying pressure in the market is stronger than the selling pressure, and that increasing demand is pushing the price upward. Such price behavior is interpreted very positively in technical analysis, because investors know that as long as the uptrend continues, pullbacks may be limited and the likelihood of the price continuing to rise along the trend is high. What we are seeing now matches this kind of scenario. Each time the price approaches the trend line, it responds with an upward move, showing that buyers are stepping in strongly. However, it should not be forgotten that every trend can eventually come to an end. To determine whether that end has arrived, we need to watch carefully whether the price actually breaks below the rising trend line. If the price does not fall below this key rising trend line and continues to hold above it, then the upward movement remains technically valid. As long as the trend line is not broken to the downside, bearish signals remain speculative, and the primary direction is still considered upward. Therefore, as long as the price stays above this trend, there is no reason for investors to panic. Such rising trend structures are generally signs that the market is progressing in a stable manner. Rising lows show that buyers are stepping in again with every price dip, and that more people are eager to buy at lower levels. This demonstrates that the market is dynamically finding support, and that downward moves may be short-lived. If the price pulls back toward the rising trend line and then experiences a strong bounce, this confirms the trend and shows that buyers are still strong. In technical analysis, such bounces are considered very positive signals, because the trend line serves not only as support, but also as a reflection of investor psychology. Every touch of the trend line is seen as a potential buying opportunity by investors. Of course, these analyses are based on probabilities. However, looking at past price movements, seeing that the rising trend line has been tested multiple times and has worked successfully indicates that this line forms a strong structure and is taken seriously by market participants. Therefore, it is quite important for the price to remain above this line. As long as the price holds above this trend, it is possible to see potentially higher levels. This can present significant profit opportunities for investors, because unless the trend is broken, the continuation of this price structure is expected, and each bounce pointing to a higher level than the previous one indicates the continuation of a positive market structure. It should also be noted that rising trend lines are critical not only for short-term, but also for medium and long-term investors. These structures act as reference points for determining the overall direction of the market. Especially an uptrend supported by increasing volume gives investors more confidence and signals that the buying pressure may continue. In such cases, every approach to the trend line may prompt investors to buy again, and the upward reaction from the line reinforces the validity of the formation. Therefore, it would not be wrong to say that the positive outlook continues as long as the current structure is not broken. In fact, potential new bounces from this structure may carry the price to much higher levels. However, another important detail to pay attention to is how sensitive investor psychology is to such trend lines. Because often, each time the price approaches the trend line, some level of anxiety may emerge in the market. But this concern is usually unfounded. From a technical analysis standpoint, as long as there are no closes below the trend line, the price is still considered to be in a positive zone. And investors continue to view such structures as buying opportunities. This in turn may trigger upward price movement again. Therefore, maintaining the trend line in the current structure is technically a very important and positive development. Another key advantage of rising trends is that they help investors control emotional decisions, because many investors tend to panic when the price pulls back. But when a trend line is in place and the price remains above it, that feeling of panic decreases and investors can make more rational, strategic moves. For this reason, trend lines are not just technical tools, but also emotional support points. In this context, the current uptrend helps investors determine direction and make strategic decisions while also reflecting the disciplined nature of technical analysis. What must not be forgotten is that as long as the price respects this trend line, the general market direction is expected to remain upward. Therefore, seeing that the current uptrend has not been broken is considered a very positive sign. If this structure holds, it would not be surprising for the price to test higher levels in the medium and long term. For this reason, such formations should be considered significant reference points for both short-term and long-term strategies. Success in technical analysis is possible through correctly reading and strategically evaluating such structures. In this context, the price remaining above the rising trend line continues to be a positive signal for investors. But we can't solely rely on trend lines to make decisions. Let's take a look at some other metrics. Stay tuned.
I'm interrupting the video for a moment, friends, because BitTunix Exchange has a great campaign. Here's how it works. After registering on the exchange via the link in the description and completing KYC, if you deposit $100 for your first deposit, you will receive a $20 bonus. If you deposit $500, you will receive a $100 bonus, and if you deposit $1,000, you will receive a $200 bonus. I think this is an excellent opportunity for leverage trading. For more details, you can read the articles below. The link is in the description.
When we carefully examine the chart, we can see that the price reacted twice at a certain level, made an upward move, and then approached the same level again before pulling back. This type of price behavior is well known in technical analysis and is commonly referred to among investors as a double top formation, or more widely as an M formation. This formation typically occurs when the price reaches a certain resistance zone, but fails to break through it on 2 attempts. The first top represents the price's initial approach to that level. The subsequent decline forms the neckline, which serves as the baseline of the formation. Then, the price recovers and tests the same resistance level again, but after failing once more, it begins a downward movement. At this point, an M formation is considered to have formed technically. However, the critical aspect here is whether the decline continues all the way to the neckline. If the price pulls back to this neckline level, the formation is considered technically complete. In the current chart setup, a similar scenario appears to be playing out. After being rejected for the second time at the resistance level where it previously encountered selling pressure, the price has entered a downward correction. This move indicates the formation of the second top. At this stage, the price is slowly approaching the neckline, the starting point of the formation. In such formations, investors often panic and sell early when the price starts to drop. However, what's important here is to observe how healthy and controlled the decline is. A pullback toward the neckline doesn't necessarily signal a negative outlook. On the contrary, this move is technically very normal and expected, as the nature of the formation implies a retracement to that level. The key factor is how the price reacts once it reaches this level. If the price meets strong buying interest at the neckline, the level where the formation started, the potential for a new upward wave is quite high. This region acts as a key technical support zone. If buyers step in to defend this level, it could mark the beginning of a reversal following the formation's completion. This means the current pullback could represent a buying opportunity for investors. In other words, the decline is not an end, but rather a potential signal of a coming upward move. In addition, volume data plays a significant role during this process. In double top formations, the volume during the formation of the second top is typically lower than the first, which generally confirms the validity of the formation. In the current situation, the observed decrease in volume supports this technical expectation. However, this decrease in volume also suggests that the bearish momentum is weak. In other words, the selling pressure is progressing in a limited and controlled manner. This increases the likelihood of the price finding strong support when it reaches the neckline. Also, looking at past data, it's evident that such double top formations don't always lead to lasting downtrends. Especially in the crypto market, these formations sometimes only indicate short-term corrections, after which the price resumes its upward movement. Therefore, the current approach should not be solely focused on the decline itself, but also on whether the pullback is progressing in a healthy structure. If the price reaches the formation's starting point in a controlled manner and encounters strong buying interest, the chances of a sharp upward movement increase significantly. From a technical perspective, the target of this formation is generally equal to its height. That is, the maximum distance between the two peaks is measured and projected downward from the neckline. However, it's important to note that sometimes prices reverse before reaching this target and begin a new trend. This can offer a retracement zone that investors interpret as a buying opportunity. Because the decline is not necessarily a signal to panic, but rather a retest of previously established resistance and support levels. When we combine all these technical data points, we can confidently say that the price is currently moving within an M formation and is in the completion phase of that pattern. However, this completion should not be seen as a threat by investors. It can become an opportunity if interpreted correctly. Since the pullback is approaching a strong support zone where the formation began, a strong reaction here could lead to a renewed upward movement and even break above the previous top to form new highs. In conclusion, the current decline toward the starting point of the double top formation should not cause panic among investors. This movement is technically very natural and even expected. As the price reaches critical support levels, other technical indicators such as volume, momentum, and oscillators also suggest that this area could serve as a launching point for a renewed uptrend. Therefore, the drop should not be seen as the end, but rather as a corrective step on the path to a larger upward move. For those who act with patience and logic and technical analysis, formations like this can be strong indicators of upcoming opportunities.
When the chart is carefully examined, it can clearly be seen that the price action has moved above the 200-day exponential moving average. Such a move is generally considered an extremely positive technical signal by market participants. Especially breaking above a long-term moving average like the 200 EMA is often seen in technical analysis as an indicator of major trend changes. When the price sustains above this level, it sends a strong message that the long-standing bearish trend in the market is beginning to weaken and that the bulls are starting to take control. In this context, the price breakout above the 200 EMA represents not just a temporary spike, but also contains the potential for a technically confirmed trend reversal on higher timeframes. However, expecting the price to continue rising in a straight line right after crossing above the 200 EMA is usually unrealistic. In markets, corrections, retests, or profit-taking phases can often occur for a period, and this is actually a natural part of healthy price formation. What we're currently observing on the chart is exactly indicative of this dynamic. After successfully climbing above the 200 EMA with strong momentum, the price is technically pulled back toward this level, entering a type of retest phase. Such a retracement, or in other words, the price touching this important moving average and gathering strength, is a healthy and positive development. Because these kinds of pullbacks are often seen as the preparation phase before the start of a new upward wave. It should also be remembered that the 200 EMA is not only followed by investors, but also by large institutions conducting algorithmic trading. Therefore, a price pullback toward this area creates an opportunity for buyers to re-enter the market. If this retest process is completed successfully and the price regains strength above the EMA and breaks upward again, this could mark the beginning of a new bullish trend. A potential bounce following the retest from the 200 EMA level would present a promising outlook not only for short-term, but also for medium and long-term investors, because the price confirming the 200 EMA as support shows that confidence is being re-established in the market and that a foundation is being laid for a larger move. These types of moves are often accompanied by increased trading volume, which provides extra confirmation regarding the direction of the price. Also, in technical analysis, the principle that key resistance levels turn into support once broken is a widely accepted and reliable approach. According to this principle, if a level previously acted as resistance and the price managed to break above it, that level turns into support during pullbacks. Currently, the 200 EMA level is undergoing exactly such a transformation. This level, which previously acted as a significant barrier for the price, is now being tested as support, and a bounce from here could lead to higher price levels. If the price reacts positively from this area and starts a new buying wave, it would not be wrong to say that this move has a solid technical foundation. This type of setup increases confidence among investors and helps the market gain upward momentum in a more stable way. Additionally, these kinds of technical structures can present significant opportunities in terms of formation targets. For example, prices that remain sustainably above the 200 EMA often aim to test previous highs. If those levels are also broken, the price may form a new peak. On the other hand, during this process, some investors might go for profit-taking out of fear that the price could fall back below the 200 EMA. But such corrective selling is generally short-lived and necessary to maintain market balance. because a price movement that only goes up continuously is unhealthy and could lead to bigger crashes. Therefore, the price testing the 200 EMA again and gaining strength from this level can be an important signal for a sustainable rally. If the retest process is completed successfully, it is likely that the price will enter an upward trend again. Following this move, previous resistance levels could become new targets. If those levels are broken, a new price discovery process could begin. During this phase, the key point for investors to watch is that the 200 EMA level should not be lost. If the price can gain upward momentum without falling below this level, the bullish trend may continue to strengthen. In conclusion, the price moving above the 200 EMA and then retesting this level to gather strength is an extremely positive development from a technical standpoint. Following this move, the probability of seeing new highs is quite strong. Of course, there are always uncertainties in the market, but technical structures and historical examples show that such movements generally result in positive outcomes. Therefore, it is very important for investors to carefully monitor such technical signals and shape their strategies accordingly. Especially patient and disciplined investors can turn these kinds of retest setups into opportunities and maximize their gains. The 200 EMA is for long-term trends.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.